What if the world's largest corporations, major banks, and even sovereign governments were no longer just talking about cryptocurrency? They were actively holding it, integrating it into their operations, and passing laws to make digital assets a permanent part of the global financial system. In early 2026, that scenario is no longer speculative. Adoption has moved from fringe experiments to strategic decisions at the highest levels of finance and policy. Companies are allocating billions to Bitcoin as a treasury asset. Banks are building infrastructure to custody and settle with stablecoins. Governments are establishing Bitcoin reserves, and regulators are creating clear frameworks that allow innovation while protecting users. Let's walk through where things actually stand today, focusing on concrete examples, numbers, and the real-world implications for everyday people just starting in crypto. Corporate adoption. From skepticism to strategic balance sheet decisions, the corporate embrace of cryptocurrency has accelerated dramatically. As of March 2026, more than 190 publicly traded companies hold Bitcoin directly on their balance sheets, a number that has roughly doubled in the past 18 months. Collectively, these companies control over 800,000 Bitcoin, with a market value frequently exceeding $50 to $70 billion, depending on price levels. MicroStrategy, now rebranded as Strategy Inc., remains the most visible example, holding hundreds of thousands of Bitcoin acquired through a combination of cash reserves, convertible debt offerings, and equity raises. Their strategy is straightforward. View Bitcoin as a superior store of value compared to cash sitting idle in low-yield accounts, especially in an environment of persistent inflation and currency debasement. But it's no longer just MicroStrategy. Companies in technology, Tesla briefly held and later sold Bitcoin, but others quietly accumulated, finance, Galaxy Digital, Coinbase, manufacturing, and even consumer brands have added Bitcoin to treasuries. Some firms use it as a hedge against rising debt costs or currency weakening. Others see it as a way to signal forward-thinking leadership to investors. Beyond Bitcoin, a smaller but growing number of companies hold Ethereum or stablecoins for operational liquidity. The pattern is clear. Once a few large players proved the model, buying during dips, holding long-term, and benefiting from appreciation, others followed. This creates a self-reinforcing cycle. More corporate demand adds legitimacy, reduces perceived risk, and attracts even more participants. For everyday investors, this matters because corporate adoption often precedes broader retail acceptance. When public companies disclose Bitcoin holdings in quarterly filings, it normalizes the asset class and can influence stock prices, investor sentiment, and even regulatory attitudes. Banks and traditional finance. From caution to infrastructure building. Banks have moved from outright resistance to active integration. Major global institutions now offer custody, trading, settlement, and even issuance services tied to digital assets. In the U.S., several large banks provide institutional-grade custody for Bitcoin and Ethereum, partnering with custodians to meet regulatory requirements. Stablecoins have become a cornerstone. Visa and MasterCard expanded USDC settlement rails, enabling billions in annual volume for cross-border and merchant payments. JP Morgan continues to develop its Onyx blockchain platform, running tokenized deposit pilots and stablecoin-based internal transfers. Citi and BNY Mellon offer tokenized asset services for clients, while smaller regional banks experiment with blockchain for faster clearing. Europe has moved even faster, under MiCA, Markets in Crypto Assets Regulation, fully implemented since late 2024. MiCA gives banks a uniform framework to issue asset-referenced tokens, ARTs, and e-money tokens, EMTs, with strict reserve and redemption rules. Several European banks have already launched or applied for stablecoin licenses, aiming to offer 24/7 instant settlements that traditional SWIFT network currently cannot match. Globally, The picture is similar. Singapore, Hong Kong, UAE, and Brazil have clear licensing regimes that encourage banks to participate. Stablecoins now handle tens of billions in daily volume, often used for treasury management, liquidity, and cross-border payments, moving from crypto-native to core financial infrastructure. For beginners, this integration means easier on-ramps and off-ramps. More banks offer crypto exposure through regulated products, ETFs, custody-linked accounts, and stablecoins provide a bridge between fiat and crypto without extreme volatility. Government adoption, sovereign reserves, and strategic holdings. Governments are increasingly treating Bitcoin as a strategic reserve asset, similar to gold or foreign currency holdings. El Salvador continues to hold thousands of Bitcoin, acquired through daily purchases and mining revenue, despite IMF-related adjustments that made Bitcoin acceptance voluntary rather than mandatory. Bhutan has quietly built one of the largest government Bitcoin reserves through hydropower-powered mining, with holdings valued in the hundreds of millions. The UAE supports crypto mining and holds Bitcoin through sovereign-linked entities. Several African and Latin American countries mine Bitcoin for national revenue, while others explore strategic purchases during market dips. At least a dozen nations now hold Bitcoin at the government or central bank level, with total sovereign holdings estimated at over 500,000 Bitcoin. This adds significant legitimacy. When governments allocate reserves to Bitcoin, it signals long-term confidence in its scarcity and store-of-value properties, encouraging institutional and retail adoption. For everyday users, sovereign involvement reduces perceived risk and can stabilize long-term price floors, though short-term volatility remains. Regulatory progress. From uncertainty to structured frameworks, regulation has progressed from reactive enforcement to proactive frameworks. In the U.S., the Genius Act, passed in late 2025, established a federal framework for payment stablecoins, requiring issuers to be banks or licensed non-bank entities, maintain 1.1 reserves in cash or treasuries, and offer prompt redemption. The OCC, FDIC, and NCUA are finalizing implementation rules, creating clearer paths for banks to issue and handle stablecoins. Market structure bills, including Clarity Act drafts, seek to define digital assets as commodities, CFTC oversight, or securities, SEC oversight, with registration requirements for exchanges and protections for users. While full passage is pending, progress has reduced uncertainty compared to 2022-2024. Europe's MiCA regime is fully operational, providing uniform rules across the EU for crypto assets, stablecoins, and service providers. It emphasizes transparency, consumer protection, and financial stability, encouraging banks and firms to participate under clear guidelines. Other jurisdictions, Singapore, Hong Kong, UAE, Brazil, Japan, have refined licensing regimes that balance innovation with safeguards. Globally, the trend is toward clarity rather than bans, allowing legitimate use cases to flourish while addressing risks like money laundering and fraud. Where we stand. Balanced view for beginners. The picture now is clear. Cryptocurrency adoption has moved far beyond speculation. Companies allocate treasury reserves, banks build infrastructure, governments hold strategic Bitcoin, and regulators create structured frameworks. This progress brings real benefits: lower fees for international transfers, more custody options, clearer rules for participation, and growing legitimacy that can reduce volatility over time. But risks remain: price swings, security concerns, regulatory changes, and the fact that not every use case is fully mature. Always start small, secure your private keys, use reputable platforms, and do your own research before making any decisions. Which part of this adoption surprises you most? Corporate treasuries, bank integration, government reserves, or regulatory clarity? Share your thoughts in the comments. Like if this helped you understand where crypto stands today, and subscribe for more beginner guides. Thanks for watching Crypto Pulse 360. Stay pulsed.